Hassan, I want to bring you in to conclude now in the next few minutes. Um, you've got people that invest their monies in banks as a safe haven in Sharia compliant funds. A lot of people are investing in, provident funds. And at this point in time, with the markets spiraling, those funds are doing well. What's your closing advice to the investors and the guys that are saving and having investments in pension funds?
Sure.
Look, obviously, you're telling them to hang tight with what they have.
You gotta hang tight. You can't time markets. That's unfortunate. That's the nature. And especially if you're now in pension and retirement products, those tend to be long-term products. Those that are already retired, they're living off their living annuities. They just need to be careful in terms and cautious as to how they draw down rates and the like. Markets have done pretty well. So all of those that are in market linked type of products would have done pretty well. The important thing is to ensure you have diversification, and diversification both from a asset class perspective, but also from a geographic perspective. And you'll find many of the Sharia compliant balanced funds that are out there give you both asset classes difference. For example, you got equities, a bit of income and property. At the same time, most of them now have in excess of 25, 30, and in certain cases slightly more as well, offshore exposure as well. So they're benefiting both from the...
So they're giving you a reasonable return.
They're giving you a reasonable... So they've done pretty well. And I think you've seen over the last 10 years, 15 years, the returns have been pretty decent for that. So I think just continue. Obviously, the older you're getting, and then you want to shift a little bit more in towards lower risk type of products, more income related. But if you're still anticipating, you're just still in your 50s and 60s, and you still got potentially another 20 odd years, then you want to be diversified and have a reasonable exposure to the equity markets as well.
Now, finally, in terms of your budgeting and your spending, how should you manage that? Because obviously, those that are pensioners are getting a limited income. Those that are working are investing in a pension fund, but they have to budget because obviously the cost of living is rising. And if you're going to take whatever savings you got and spend it and not save and bank for the rainy day, you got a problem. So what's your advice to those listeners?
As much as possible, if you can. I know it's very difficult for many people living hand to mouth these days because of the environment you're in. But as much as you can, if you can save between 10 to 20% of your salary and put it away, it helps in the long term. If you can do that. And, if you're fortunate enough to get a 13 check or a bonus come the end of the year, take a portion of that also and put it away. Yes, we must live, and we have to live. Unfortunately, it's very difficult, but I think it's important that you do save for a rainy day, especially in the times we live in. There are always a lot of different circumstances and the like that can happen, whether it's wars that are taking place globally could impact us, whether it's a disease like the COVID. The COVID pandemic, and that impacted many people. And if you didn't have...
You had to dig into the savings.
You had to dig into your savings to go through that difficult period, because many people were unemployed or couldn't work for months on end and had a difficult period. So you have to keep portions of your income.
So you're telling them budget, don't spend more than what you are earning.
Live within your means.